Good day, ma'am. This is Lady May Patac from BSHM 2A student. And today I am going to tackle about the chapter 13, which is the organization for administration and control. No business runs itself. It needs repeated stimulation. It is not easy to build a business. It takes time, intelligence, and hard work. A business will run smoothly only if proper attention is given to it. A group of unarranged machines, a body of unarranged workers, and a pile of unassembled materials do not make a good concern. As to what is to be produced, to whom it may be sold, who is to do each part of the work, when the goods are to be finished, whether the quality is satisfactory, how money is to be collected and paid out, and how to settle a wide range of problems, all of these must be administered and controlled. Administration and management. The function of administration and control is to keep the business going smoothly, to apply the necessary stimulus and direction, and to look ahead for possible opportunities as well as danger signals. The act of administration refers to the establishing and maintenance of major policies, while management refers to carrying out and implementation of those policies. Management problems. Management problems may be grouped, namely 1. Problem of policy, which involve the setting of major objectives and formulating plans of actions for their attainment. 2. Problems of organization, which involves the classification of activities into administrative groups, fixing responsibilities for the performance of each group, and providing for the performance of each group, and providing for the proper coordination of all the groups in order to cooperate effectively in the attainment of the objectives. 3. Problems of personnel, which involves and procurement, development, and use of individuals to perform the responsibilities established by the organization plans. 4. Problems of facilities, which involves the procurement, maintenance, and use of the physical factors needed in the performance of the operation necessary in the attainment of the objectives. 5. Problems of methods, which involve the and use of routines and procedures required to perform effectively the operation necessary to attain such objectives established by the policies. Meaning of control. The following taken from E. Robinson, Business Organization and Practice, and from Davis Stetson, Office Administration, published by Alexander Hamilton Institute. Control may be understood if it is broken up into several aspects of knowledge. 1. Knowing exactly what work is to be done, as to quantity and quality, as to time available. 2. Knowing what resources are available for doing the work, as to personnel, as to materials, as to equipment, as to other facilities. 3. Knowing that the work has been done or is being done, with the resources available, within the time available, at a responsible cost as compared with standard costs, it in accordance with the required standard of quality. 4. Knowing immediately of any details or variations, as to the happening, as the cause, as the remedy. 5. Knowing what is being done to remove such hindrances, as to who is doing it, as to how he is doing it, as to when it will be done. 6. Knowing when it is done, as to time finish, as to quality of the finished job, as to who did it. 7. Knowing that recurrences are guarded agents. Against. In what way, by whom, at what cost, with what system of inspection. Elements of control. Control is ordered to be effective must be afforded with necessary elements such as authority and knowledge, guidance and direction, constraint and restraint. To exercise control, the manager must be able to know what the situation is and what it should be. He should know what to do to bring the situation into line. Equally important is to have authority to undertake necessary and appropriate action. In the execution of control, the manager therefore must have his lines of communication established, open and functioning. In every management problems, there is present a, a multitude of elements and conditions. Some of these are desirable and which the manager would like to retain. Others are undesirable and have to be eliminated or discarded. Controlling, therefore, is the conscious directing or influencing of certain causes so that certain desired result could be effective. Administrative controls. A basic task of management has to do with work. Together with planning, organizing, coordinating, and directing, control is one of the functions of management. When management introduces rules and regulations, standard operating procedures, and standing orders, and when it sees to it that these are followed in order to attain the company's objectives, it is establishing and enforcing controls. Production control, earlier discussed under the manufacturing, is a form of administrative control. So is inspection. The most common form of administrative control, however, is budgeting. The budget. The budget is a collection of statements of income and expenditures for a future period based upon past experience, present conditions, and anticipated future trends. The budget is a tool of management whereby it hopes to achieve the highest reasonable expectation of operating efficiency. The business budget, being a tool of management, is only useful as the care with which it is prepared and the manner it is followed. It makes management regularly study financial conditions, the markets for the company's products, and properties of the general market. It points out disruptive or unusual elements that must be given carefully attention. It brings about a coordinated use of system of accounting, books, records, and the findings of research. A budget may cover a single items of expense such as the advertising budget, or it may cover an entire department's activities such as the sales budget or the purchasing budget. When the term budget is used singly, however, it is usually refers to the budget of the business enterprise. The budget may be prepared in terms of months or quarter or for a year. It should be long enough to include complete cycle of seasonal fluctuations of volume, production, merchandise turnover, and financial operations. In the preparation of a budget, the president of the general manager usually calls a conference of all top executive or departments heads. The general plans for the coming budget period are taken policy, after which important changes in department policies are up. The conference discusses changes in company made know the rest. The department heads prepare their own respective budgets, which are turned over to the budget officers for coordinations. These budget officers may be the chief accountant, the, the comptroller, or a specific official whose principal task is budget making. This coordination of department budgets and their integration into the overall budget may be the work of a budget committee. If another conference of all department heads is found necessary, one may again be called. In preparing the separate budgets of departments, the sales budget is usually attended to first. This is because the largest part of the income of any company comes from sales, and the forecast of sales for the coming budget period will form the basis of the other departmental budgets. Sometimes a sales expense budget is prepared separately. The cost of maintaining the sales department salaries, overhead, and the like are included. Sales promotion may be part of sales expense. If important enough, it may also occupy a separate item in the overall budget. The production budget is geared to meet sales requirements. What are the physical quantities to be produced? How much finished goods are on hand and how many should be on hand at the end of the period? What are the physical requirements of plant? How much production can be company finances permit? All these questions have to be answered. The production budget enables maintenance of an even rate of production and cuts production costs. Timing and schedules are attended, preparing the purchase budget. Inventories are checked and production requirements both as to volume and to value are carefully studied. The purchase budget is usually broken up into monthly budget to make the financial needs clear and to find out when the company needs money the most. The finance budget gives probable income and expenses over the whole period to enable management to see the overall financial picture and arrange for loans or other sources of finance. The business budget must be continually compared with actual performance. Once the budget period gets underway, it should be adaptable and permit revisions not originally foreseen. Government control. Business in the Philippines is essentially characterized by free enterprise but with many elements of government control. The business enterprise and the company of a whole are subject to a pervasive and comprehensive scheme of government controls. Government control may consist of regulatory agencies such as Securities and Exchange Commission, the Public Service Commission, the Patent Office, and the Insurance Commissions are quite well known and exercise familiar functions. The government enforcement or pure food laws, labor laws, social security legislation, anti-monopoly laws, and even tariff, customs, and revenue codes is an example of government control of businesses. Public control may become more direct when a government agency invests sizable amount in a business or buy it outright. Loans from government financing institutions are often accompanied by government officials sitting in meetings of boards of directors of private corporations. Accounting controls. Accounting has been defined as the collecting, summarizing, analyzing, and reporting in monetary terms of information about the business. Accounting provides information for two distinct groups it gives information on the company's finances to stockholders, government offices, creators, banks, and other outsiders. As a tool of control, however, it gives information to management to enable it to realize the company's objectives. As a tool of control, accounting communicates to all personnel in concrete terms of pesos and centavos just what management wants to employees to do. It motivates personnel and enables review or checking up to their efforts and activities. Cost accounting enables a special branch of accounting effective operation based on accurate cost information. Importance of control. Controls give the usual advantages of planning. Waste, inefficiencies, and dishonesties becomes known and may be easier avoided. Controls bring out conditions which otherwise would remain unnoticed. More important, future problems are provided for. Since control are intended to keep an enterprise focused on its objectives, goals and objectives are formulated in clearer and more concrete form. Controls increase initiative, bring about coordination, and promote cooperation. So that could be all. Thank you and God bless.